Everyone knows about Bill Gates and how he has managed to accumulate some serious wealth in the last decade or so. Bill Gates is always found in the extreme buzz of top-notch billionaires. Everyone looks up to Bill Gates to plan their financial well-being. At least a good majority of the people, if not all. Along with making billions being the CEO of Microsoft, Gates, alongside his fund manager Michael Larson, has managed to make more than $50 billion over the past 20 years. Their duo also successfully managed to make it past the recession of 2008. They have also managed to consistently beat the S&P 500 and accumulate some serious wealth. But this time, Gates and Larson are preparing for one of the worst recessions the world has ever seen. It's no mind game that the US economy is going through a tough time. With accelerating inflation, the lowest consumer sentiment in history, the Russian-Ukraine war, and record high debt, we've found that something is cooking in Bill's mind. The government pumped trillions of dollars into the economy in 2021, but things are working out in reverse fashion this time around. The government seems to be taking those dollars out in 2022. It's a double-edged sword that's hanging around the neck of the government, with one end being the increasing inflation rate and the other end being the high level of debt. How does Bill Gates see this situation? And what are the key takeaways? You don't want to miss out on this video, so sit back and take notes. Welcome to 5-Star Finance, the place where we teach you how to achieve financial freedom. According to Gates, the US government currently has two ways at its disposal. The first one is to destroy the US dollar, while a second option is a complete crash of the economy at the risk of popping the debt bubble. Now, it is important to note that the Fed has decided to lurk on that second option. They've decided to slow down the economy at the risk of an economic collapse. For example, we've recently seen the Fed raise the interest rates by 75 basis points, which is the largest since 1994. No doubt that this increase in interest rates will slow down inflation temporarily, but it is going to have some serious consequences in the long run. Now, first up, this move of raising rates by the Fed simply means that borrowing will now cost significantly more for business investments. Another danger can be just around the corner if this move slows the economy down, causing the debt bubble to pop and throwing the economy straight into the depression everyone's been talking about. With the Russian invasion of Ukraine, it is obvious that we're going to see high energy prices as well as food prices for years to come on repeat. It also comes just when the pandemic punch is fuzzing on the cheek. Due to the pandemic, the government debt levels are already very high, compounded by those supply chain problems. So it is all very likely to pump the inflation rate and force the increase of interest rates, which is going to slow down the economy and send us to the bears. The thesis that Bill Gates seems to be having in mind revolves around the surge in oil prices, which is strongly correlated with recessions, because historically, while looking at the charts, we can always see that every time Brent crude oil has passed the $100 per barrel rate, a recession always follows. Now, the interesting thing to be noted over here is that Brent crude oil is already over $120 per barrel, which is signaling a serious recession. Now, the reason why oil prices are correlated to a recession is that the increase in oil prices means a tax on consumers. Also, high gas prices take money directly out of the consumer's pocket, which is going to leave the consumer with less money to spend, and it also lowers consumer sentiment. Research in various universities across the globe shows that the Consumer Sentiment Index is currently the lowest it has been since the 2008 recession. And it is important to notice that the economy works in cycles and the debt levels are continuously rising and falling. Gates and Larson are clever for recognizing that 2021 represented a period of immense speculation, and a complete opposite of this is coming ahead. In preparing for the collapse, Gates and Larson have been implementing some hedging strategies, and one of these strategies includes shorting stocks. Now, we all know that, unlike long positions, short positions don't need to be disclosed to the public. No doubt that the SEC is trying to change that with a new policy, but until that works out, we literally can have no idea what stocks Bill Gates is currently looking to short out. But there is one thing that we know. We know that Gates is holding a short position against Tesla stock because Elon Musk disclosed this himself. Now, Gates is already down over $1 billion on his Tesla short position, but he has not closed out his position yet. Elon Musk explained how it was $500 million in the beginning, but Tesla went up, so now it's $1.5 billion to $2 billion to close it out. Interestingly, Gates and Musk were set to meet to talk about some philanthropy, but leaked messages disclosed that Gates' Tesla short position actually stood in the way of this meeting. So the economic landscape is fragile, but in addition to that, Gates also doesn't believe that the pandemic is over. Gates, in his interview with the Financial Times, told the latter that we're still at the risk of this pandemic generating a new deadly variant that could be even more transmissive and even more fatal. Not to forget that he went on to add that this is not likely, and he doesn't want to voice doom and gloom, but it is way above a 5% risk at this pandemic, and we haven't seen the worst of it. So to put it all straight, not only do we have high inflation and liabilities, but also a pandemic that could get even more severe and wreak havoc on the world. All these factors combined put value investors at risk of a frightening economic and social crisis. Gates also mentioned productive assets as his go-to strategy when it comes down to investing, but he has been selling his assets. His most recent filing went on to disclose that he sold millions of shares in a variety of companies. For example, this included over $1.3 billion of Berkshire Hathaway, over $500 million of Caterpillar, and a list of other stocks as well. To understand what's happening over here, we need to understand something about the brains behind all this, Michael Larson. Larson is the strategist over here. He knows exactly how to maximize alpha, which is popularly known in the investing world as the risk-adjusted return. When the market crashed in 2008, Gates experienced a very small loss as disclosed by the stats, all due to hedging strategies of Larson. Although the detailed strategies have been secretive, we know that the strategies are based on Buffett's investing principles. Most of the companies in Gates' portfolio don't get affected by economic fluctuations. For example, the waste management stock. Gates owns $3 billion of this stock. No one's going to stop dumping their waste. Similarly, Gates is the largest private farmland owner in the US. Now we need to understand the reason behind his interest in farmlands. His farmlands average a return rate of more than 11% from 1991 to 2018. This is simply because even during the recession, people are not going to stop eating their food. This is the reason why farmlands are playing big for Gates. Larson is also specialized in making the correct calls about buying into different private equities, such as buying out new companies, and that's because private equity is the sector that is not available to retail investors. The best preparation for the upcoming recession can always start with planning your portfolio accordingly. When we look at Bill Gates' portfolio, we can see most of his holdings are not affected by the wider economic landscape, and that is a move that separates the billionaire lane from the ordinary lane. Apart from that, another aspect of his strategy is that he knows which stocks to short and which stocks to long. Along with his funding manager Larson, Gates is selling stocks out, which is a major indication that something is off with the economy as well as the market in the days to come. But what we can do is to prepare in the best possible way. We need to understand that everything starts with our understanding of the stocks. It forms the foundation of any value investor. For this purpose, we've provided a free guide in the link given below, which explains the 6 different stock categories. Check out the video we handpicked for you, and we'll see you in the next one.